All right,
It looks
we
like
are
we are
live.
live. Stock Unlocked special episode number 26. First time we are seeing you all on a Monday. If you are in the chat, good morning. Daniel is back from Asia. I repeat, Daniel is back from Asia. How does it feel?
It feels good. I have a little bit of a cold. Um, yeah, I caught a little bit of a cold on the way back. Probably just, staying up 30 hours traveling home. Immune system was a little weakened. So sorry about the stuffiness. But yeah, I'm happy to be home, man. It was a long trip, a good trip, but definitely ready to be home and back.
Definitely. And not to poke too much fun at you here. You definitely really pushed it out there in Asia. I know we had the 12-hour time difference. There were times when you were hopping on, who knows, in all hours of the night. The passion for the stonks is unreal, as some would say. And now you are back here with a cold. So your eyes are wide open, but your voice is not the same. So we will be going live this weekend, I believe, and we will
Yes,
hope that the sickness is behind us.
it should be. Yeah, I hope so.
Definitely. What stocks have you been looking at when you were in Asia? Were there any companies that you saw or international organizations that were kind of popping up? Anything that kind of made you think about different types of investments you could look at as a retail investor? Maybe that's not why you were on the trip, but inquiring minds want to know.
I mean, I'm just an investor in general, right? So I mean, every time I'm on a trip or whatever, I'm always looking for investment opportunities. The trip really showed me that Southeast Asia is just growing so much. Like, I think a lot of the world's growth is going to come from Southeast Asia. I mean, every economy I went into was growing by 7 to 10% per year and like sustaining that level of GDP growth. And I mean, I saw it firsthand. There is skyscrapers, hotels, everything going up in seemingly every single country. So, yeah, one thing I'm still bullish on. I was bullish on this before Asia, but I would say more bullish now is I'm bullish on companies that have exposure to all the growth over there. So one thing I'm doing in my portfolio is just really looking for companies that are paying attention to where the growth is around the world in Southeast Asia and how they're capturing it. And I don't really have any new stocks to talk about. One that we talked about on the live stream previously was ATD, Alimentation Couche-Tard. Weird company name, but they own and operate convenience stores, and they are all over the place in Asia. And I think that they are really exposed to the growth over there and will continue growing with the region. So
Well, one thing
yeah,
I noticed is we talk about so many stocks on here, and Couche-Tard specifically definitely brought out the cult following in a good way.
yeah,
People came out of the woodwork, excuse me, that we have not seen in the comments saying, hey, welcome to the fam. Love to be a Couche-Tard shareholder. So that's always really great to see, especially from the retail investing crew. It's one of those businesses that's easy to understand and not to re-go through your investment thesis. You looked at they were growing. The management was amazing. Financials were good. And just to pile back on that first comment, the growth prospects and their internationalization and the way that they actually expand and their strategy just seemed very buttoned up to you. And forgive me if I misphrased any of that. I am not an investor in Couche-Tard today, but
yeah.
Daniel
They're
is.
sorry. They're just like one of the best Canadian companies. They're a Canadian gem, and I think that's why people love them so much. Is because they just every single year outperform the S&P 500, and all they do is operate convenience stores. So it's like the simplest, easiest business for us retail to understand, and they just give us great rewards for just holding the stock and being a long-term investor. So yeah,
Definitely.
great company, great management, love it, and I love that they're exposed to world growth.
Well, one more that you've talked about in the past, I also believe you are a shareholder in, is HDB Bank.
Yes, that's one of India's largest banks. I believe it's actually India's largest private bank or public bank. I forget which one right now.
Yeah, I think it's a great country to have exposure to, not investment advice, of course. I am a little bit less adventurous than you and a little more tails between my leg as a retail investor for India. I personally don't understand the country a ton, but want exposure to it. I have personally been putting a little bit of my money into India-focused ETFs to try to capture some of that. Yes, there's some expense ratios, but different ways to
Yeah,
get exposure there.
yeah. I actually went through HDB's most recent financial report. I believe it was the Q1 report, and it's ridiculous. That bank just every single quarter is like, yeah, we grew another 20% over last year, and it's just like that's the report is every number's up 20%. Next quarter, every number's up 20%. Like it just keeps growing, man. So I'm stoked with that investment, and just gonna see what happens with that one long term. It's a little bit more on the expensive end, but it's okay.
Of course. Gonna just take a little quick peruse through the live chat here. Thank you everyone for tuning in. Stockado, great to see you again. Andrew Blunt, good morning. Sophie Moe, great to see you all. I'm not going to be able to hit all of these. Good question about Baba we might get to a little bit later. But this question, this is important. For those of you who don't know, Daniel has a very, very cute cat named Tuna. Someone asked, did Tuna recognize you? Inquiring minds want to know. What was the reception like? Did you hug? Did you kiss? What happened?
Yeah, he definitely recognized me, and yeah, he's been very, very cuddly, like the most cuddly I've ever seen him. So he's happy to be home. He was staying with my stepdad. He's back home now, and Shelby is also very excited to see him. Those two have been cuddling nonstop, so good times.
Yeah, and I don't have anything prepared for this. Have you looked into the Baba split up at all? Because I did definitely read on that, of course, being a shareholder, and there just wasn't a ton of information I could find. Like they kind of announced it, but I couldn't really find the fine print. So did you have a chance to look into that while you were in Asia, or a little bit too busy traveling?
No, I have not looked into this. I heard about it. From what I know, they're splitting the business up into 6 different segments. As a shareholder, I don't love this because, I mean, basically now you have 6 companies to follow instead of 1. And then it's like, okay, do I want to own all of them? Like, which one's best? So, yeah, honestly not stoked about this. I think it's just a lot more work now. And I'm just kind of like, why did they do it? Alibaba had this whole thing where they're like, we want to be a company that survives 102 years, go through 3 centuries. And now it's like, oh, well, now we're going to split up the business.
Let me defend them a little bit here, if this is the right wording. In my opinion, this is more of an insight into the macro look on investing in China as a whole. When you have a country that is ran by a government where they can get deep ties into the businesses and control them, unfortunately, it seems that management actually isn't in a position to ever really fully follow through on that. I personally believe that that is what Jack Ma wanted and what his vision was. Of course, there was all the media hoopla that he kind of went missing for a bit. Apparently, he was traveling the world. It's a little iffy what was actually happening there, but I agree with you. I wasn't super thrilled off the bat. This was also one of those investments that I definitely did not do super well on, full disclosure. Obviously Baba has been tanking for the past couple of years. It peaked over 300 something a share. It went all the way down to about high 60s if we're talking about the USD ADR. So it's been a big learning experience, at least for me personally, really adding those checklist items as an investor of things you want to look at for every single business you look at. I'm willing to admit that I didn't really foresee this or give this enough credit. I was like, hey, China actually has a lot of reason to let companies thrive and to participate in and compete with capitalism on a global scale. I'm actually surprised this happened. So not something I saw personally, and we're going to have to see how it plays out. There's just not too much information out yet as to exactly how that's all going to split off.
Yeah, I'd agree. I mean, I don't know what's going to happen. The stock rallied, so I mean, the market seemed to like whatever was happening, but who knows?
A relative rally.
Yeah, yeah, exactly. All right.
I'm not sure if you want to take any of these chats. I do have one stock in mind today. Not sure if it's ready to drop, if we're going to hold on to it.
Go for it. This is an interesting one because I actually almost totally disagree with you on it. So go for it.
I love these. Okay, well, I'm going to go about this in an interesting way because whenever you invest in a company, you should be looking at it as a business as a whole. So you are a pet owner, correct?
Yes.
If you were ever going through financially hard times, do you ever foresee yourself cutting out cat food or things like that will keep Tuna alive?
No, absolutely not. He's a member of the family.
Of course. So I think pet businesses then are pretty recession proof in terms of the pet companies that are selling food, things like that need to keep your pet alive. And people are obviously continuing to buy pets. I believe that there's around 90 million households in America from a little Google search I did. Please fact check for me, chat. So there are a lot of people that own pets. The company that I started looking into is Chewy, and there are good and bad things I found with it. And I figured we can share the screen, and we have a lot of people who ask us, how do you use StockLogger? How do you even look at these companies and take a top bottom look? So it could be a pretty good case study.
Yeah, go for it. Or do you want me to share my screen, or do you want to go through it?
I got it. You can parachute us if you think I'm leading us astray. But
I want you to explain why you bought this stock.
Sorry. Okay, let's take a step back. I have not bought this stock.
Oh, okay. Sorry.
I am watching this stock.
Got it. Okay.
Not to give too much away, I think there's a lot of intriguing things on the business side here and things that I find that are attractive to me about it. However, there's also things going on in the business today, and we'll get to valuation and stuff like that, which have me being a little patient. But I will be very clear, lightly bullish, but I have not bought any shares.
Okay, cool. So let's see why you're bullish. Let's go.
Cool. So my mouse is pretty messed up. Okay, so Chewy, if you guys don't know, it looks a lot like Amazon. This is a company that sells pet food products. And interestingly enough, the more I looked at this business, I was like, why does this feel so much like Amazon? The CEO of this company used to work at Amazon. So that gives a little bit away there. And their main business is they obviously sell pet food. So we're going to pull it up in Stock and Lock. Looks like I actually have to log in, which is fun. We're testing a lot of new features, by the way, so stay tuned for that. And we're going to start our search. So the types of businesses that Warren Buffett likes and that we also like, Daniel, are businesses that have predictable recurring cash flow. One thing that I found very interesting about Chewy is they are very, very consumer focused, and they actually have a subscription model that they call Auto Ship, I believe. I might have to double check that's actually called Auto Ship. But roughly 70, it might have been 73% of the revenue that came in the past year was from from consumers that basically had this on autopilot. And the reason why I got turned on to this business, Daniel, I was reading a book the other day called Superfans by Brittany Hodak. And the book is all about that your consumer story and your business story is at the intersection of your story and their story in terms of getting someone's buy-in to the business. And in that book, she described how consumer friendly this business was. They encourage you to share pictures of your pets with them. They do things such as if your pet dies and you had an $800 prescription come, they will refund you for that entire prescription. So definitely takes a page out of the Amazon playbook for being consumer friendly. And the nail was hitting the coffin for me when I went home the other week, Daniel, and there was a huge Chewy box in my house. And I just lightly asked my mom, I didn't prime her on it at all. I said, "Oh, Chewy, like, what do you think of them?" And I'll try to reenact her. "Oh, Jake, I love Chewy. I'm a lifetime customer. They're the best company. I love interacting with them. And I'm there as an investor." I'm like, okay, like this is good. So the light little research I did was very consumer friendly company. Consumers absolutely love them. 60% of their customers came in the past year. And I don't have the retention number top of hand, but they have high retention. Any questions on that before I do a little walkthrough on Stock and Lock, Daniel?
Nope, all makes sense.
Sweet. So we have a lot of people asking us, we love watching you guys, but how do I best start looking into a company? So the first thing I would do is I would type in, Chewy investor relations and just kind of get a feel for who the CEO is, CTO, people running the company, look at their mission statement. Again, you should just really have a good understanding of what this company does. One example that I like to use for a company that I would never personally invest in is a company like Intel. Maybe it's great, but I tried to read their investor website and everything they're doing with their deep technology on processors, and it made me feel like one of the dumbest people on the planet. So anyways, I could really understand this business. They sell dog food. I love Stock and Lock Insights for the first piece of this. And the reason why is this really breaks down the business into a couple of different categories. So I usually ignore analysts. That's my own opinion. I just don't ever trust them or care about what they have to say. They are in a good financial standing in terms of no debt. Their current ratio is all right, and their shares are modestly increasing as they do have share-based compensation. And their growth in the last year is pretty good. I will call out, though, that they did have a relatively flat year coming off of COVID where they had a huge boom. Just a flashback to the stock price here, you might notice, hey, Jake, you're looking at the stock and it used to be 120 and now it's trading for $35. What are you thinking? Well, I think that the stock got incredibly overvalued from a huge growth year, and the company definitely rebounded. This company currently only operates in the United States, and they have about a 38% gross margin. So the margins are decent. So right off the bat, Daniel, my gut is I love the consumer side. I love their business. The financials are a little bit of a mixed bag. They're definitely growing on a 2-3 year time span. Their balance sheet's decent, but it's not a tech company. You know, this is not a 90% gross margin business throwing off a ton of cash flow yet.
Yeah, that's my problem. My problem with this business is like it seems like it has incredibly low margins, and it looks like it's hard for this business to be highly profitable. So it's really just a profitability thing for me. And then if you take a look at how much profits they make versus the price you're paying for this business, like I think this looks so expensive. I like still today. They're a $15 billion company. I believe they have about $10 billion in annual sales, which is like a price to sales ratio of 1.5. I don't care about that. What I care about is how much free cash flow are they generating, and it's like next to nothing. I believe on that $10 billion of sales, they have like, what was it, $300 million of operating cash flow, 350 million, $230 million of capex, $120 million of free cash flow, which is a free cash flow margin of 1%, which means that basically 1% of the revenue goes to actual shareholder profits, which is like not that much. So yeah, I mean, like it's growing and whatnot, but like none of that growth is actually translating into shareholder profits or anything like that. So it just looks really expensive to me, and I'm a little bit worried about that thin profit margin of 1%.
Well, Daniel, I got you because I spent over an hour last night reading through their shareholder letter and their last file, 10Q annual SEC filing. And I've got a little story to share with you about where I personally see this company going.
Okay.
So I think that you will agree with me, and we can quote the investing greats here, like Munger, whoever you want to quote, that you would rather buy a great business at a decent price than a okay business at a great price. The other way to phrase this is, you know, don't go looking for cigar butts. I think that's what, you know, Buffett used to do earlier on in his career. And remember, the CEO of this company used to work at Amazon. So the way Amazon grew was obviously invest. And everyone kind of knows what happens there. Am I saying this is the next Amazon? No, I am not saying that. Do not quote me saying that. But there is a big growth story here. So right now, they are just operating in the US. Also, what I found through reading their annual letter was they had some non-automated facilities that were not super efficient in terms of shipping out product and stuff. They had just finished in the past year or so building a couple of really big automated shipping facilities that are working very well for them. They're able to meet all their consumers' demand, ship everything on time. They do all of that very right, which is logistically super hard to do. And they actually are closing down some of their older, I believe it was one or two of their non-automated warehouses. So this company has been investing in automating and scaling out. This company was also founded in 2011. So to be founded in 2011 as an LLC and to transfer into a corporation that went public in 2019 with 24 million customers that they retain around the United States and 10 billion plus in revenue, you know, valuation aside, that to me is very impressive. This company IPO'd at a very similar price in 2019, and they were making about a third. So not that you always want to go relative back to where it was debatably overpriced to begin with, but this company now is back at its IPO price. The thing that I love, Daniel, that made me get so excited about this is they are doing international expansion plans that they just launched, and they're going to give us more information in the next report. I see a lot of growth ahead for this company, and my this is crazy, pie in the sky prediction, and then I'll stop ranting, is this is a business that I believe Amazon would be very interested in acquiring in the future. Would I be investing on it because of that? Heck no. Would I buy the stock today? Maybe I would buy literally one share just to see how I sleep and feel on it. I kind of like to do that, but like you said, it's expensive. There is some insider selling.
There's a lot of insider selling.
There's a lot of insider selling, yeah. So there's real hit or miss things with this business, but it's really hard to ignore that they have a great brand. They win over customers and retain them, and they're making $495, almost $500 per customer per year, which is going up because again,
they're not making 500. They're selling 500. They're making $5. Yes. They're making $5.
So anyways, this is one of those businesses that I believe is going to continue to sell product. They have big growth ahead of them for international expansion. Do I love the valuation right now? Not really, but it is definitely on my watch list and something I'm going to be keeping an eye on in the future.
Yeah, to me, this just looks like a revenue story. I highly doubt they're ever going to generate profits for shareholders, and like that's a big issue for me. So this is pass for me big time. Also, the CEO looks like he loves to sell all his shares whenever he gets them. Big red flag, especially when the stock is down, 70% from its highs. Just a lot of red flags here for me that I'm just not interested, man.
You
It's
don't,
gonna
you don't
be it.
like this?
I don't love it. No.
This was the one. So what's funny, Daniel, I'm not going to open up my personal email. Guess who sent an email to the investor relations department of Chewy last night, politely asking if there's any information they could share about the insider selling going on?
Probably you. Did
This
you
guy.
also ask them how they're going to get that 3% operating cash flow margin up?
That's going to be the next question. So again, haven't bought it. It's on my watch list, but I think companies like this, you could probably flash back and people in your seat would be saying, "Oh, Amazon, they're never going to be profitable. There's no free cash flow,
Here's
blah
the
blah
thing.
blah."
I'm going to cut you off. Here's the thing.
Yeah.
Amazon has produced tons of operating cash flow. Amazon has been a pretty highly profitable business in terms of operating cash flow for a long time. Then what they do is they take that operating cash flow, they spend it on capex, and then that's basically where all of their money goes. So in terms of cash from operating activities and how much money the business's operations actually make, it's been there and it's always been growing, well, except for the last few years. And then basically it's been like, okay, we take that operating cash flow, invest it into capex, but we could stop that at any point and become a highly profitable free cash flow business. Thing about Chewy is it doesn't have that operating cash flow. So there's no operating cash flow to even turn into cash flow for the investor. Look on a trailing 12 months basis. Do not look at quarterly for Amazon. And you can see they've always been focusing on increasing their operating cash flow because how much cash is the operations actually making? Like, you
Yeah,
got to zoom out
I think
further,
we're gonna
man.
have to
You got
agree
to
to
zoom
disagree.
out. You
Yeah,
got to,
we'll see what happens.
yeah, we'll see what happens. I'm not bullish.
Well, I'll let you
It's
know and
definitely
keep
not an
you
Amazon.
informed. Let's be clear. I am not trying to say this is an Amazon. What I am trying to say, though, is this is a very consumer-friendly business ran by an ex-Amazon exec who seems to be using a very similar playbook to invest a lot in automation, customer absolute obsession, and forming real lifetime people that are always going to own pets and always be going to them for their products. If you look at Petco, it's a fallen ship. BarkBox, fallen ship that went through SPAC, I think, during COVID. So again, it's on my watch list. We'll have to track this one, but I do love when we have friendly disagreements. I think that's what makes investing fun.
Yeah, I mean, we'll follow it.
Yeah, I'll follow it. I'll keep you informed. I know you're not super stoked, but I don't know, dude. Like, how does this not look like exactly what Amazon went through? Like, these numbers are almost identical to what I just showed you in early 2000 from Amazon, from operating activities, TTM. So, and
Sure. Okay.
yeah,
Let's move on. We disagree. Let's move on.
fair enough. I got to get back to, I'm like afraid to click the wrong tab here. There we go.
Okay, we got a question here. Someone asked about Copart. Silent Seeker. Daniel, have you looked at Copart? It's Chris Mayer stock, author of 100 Baggers. Yeah, this one has come up on my radar a lot, but I have not dove into it. I don't know why I can't share my screen. Sorry. Let me go. Boom. But I haven't like dove into this business too much. But if you take a look back here in 2000, it was $1. Now today the stock is $74. It's up like 7,600%. And it looks like it just continues going up and to the right. Basically every single time it goes down, it just continues rallying back up. And it looks like it's actually near all-time highs right now. But yeah, I have not taken a deeper look into this. It seems like a really good research candidate though. Revenue looks like it's been growing over time. What about the cash flow? Operating cash flow looks like it's freaking taking off since about 2016. It does look like it it does look like it is a little bit more expensive though. I mean, they have $1.2 billion in operating cash flow, $35 billion company. That's like 30 times operating cash flow, 44, 45 times free cash flow. So it does look like it is on the more expensive end right now. So I'm not like too interested in it. If it came down more, I think I'd be more interested in it. But yeah, I don't know. It just looks like it is a little bit too expensive for me to be super interested or seriously consider it at the moment. So that's kind of my thoughts on it, at least right now.
Financials at least look pretty good.
Yeah, financials look decent.
Awesome. I think we might have time for one or two more here. This is going to be a quick half-hour one. We are going deep dive on Stock Unlock strategy as a company. So we really appreciate everyone who supports us with a subscription, people who tell their friends about us. It really means the world and continues to enable us to do streams like this and create software for you all. So thank you.
Got a couple questions here about ANET. This one looks like it IPO'd in 2014. It's now up over 10x in 7 years. Wow, that's pretty impressive. What does this one do? Engages in the business of developing, marketing, and selling cloud networking solutions. Based in California, pretty big company. Looks like it's worth like 50 billion. Take a look at their financials. So it looks like revenue has grown from 300 million to 4.4 billion in the past 9 years. So they've like, what is that? 12x, 13x revenue. And then cash flow, operating cash flow. Looks like they have kind of a little bit of a cyclical business, at least from this chart right here. Like operating cash flow looks like it grows, declines, grows, declines, grows. Currently in a decline. And then free cash flow, what does that look like? Probably the same story. Yeah. So free cash flow of 448 million. At the peak, it was 1 billion. On a $50 billion market cap, it does look quite expensive today.
I feel like that's the quote of the stream. Looks expensive.
Yeah. I mean, it is what it is, man. A lot of stocks look quite expensive to me most of the time. The CEO looks like they like to sell shares quite a bit. They do have a lot of shares, though, 6.8 million shares. So the CEO looks like they're basically just trimming. So that's not that bad. But yeah, it's something to pay attention to. Overall, looks like it's a pretty decent business. Like the financials are sound. Financial health, 4.6, strong current ratio, debt-free, buying back shares, more cash than liabilities, which is very good. Very, very good. So not in any financial stress. Growth is very good.
Yeah, I personally love the profitability growth combo. I use our screener a lot for that, actually, because when you have growth actually with profitability, which is, of course, what Chewy did not have, it did not have the profitability.
Yeah.
So hard to not like that.
Yeah, the only really thing for me is like, I would want to know why is the operating cash flow decreasing and why is the free cash flow going down? Because revenue is growing a lot. Like revenue is up 48%, but that did not translate into profit growth. Margins are pretty strong though. Free cash flow margin has declined right now, but yeah, I would want to know about that. And then overall, just the valuation looks like it is on the more expensive end today for me personally, but looks like a good research candidate. I don't know.
Dude, it feels great to be back. I missed your background of you in Canada. I'm sure many people in the chat did as well.
Yeah, thank you. It's good to be back.
Anyways, I know we were doing a shorter one today. Daniel and I personally, along with Nick, the third co-founder who is not here, we are really diving deep in our business. So I'm going to do a few plugs. We really appreciate the support that you all give us. And I actually want to shout out someone in the chat who really went out of their way to do something really amazing for us. And that person is Ali. I think Ali left the chat, but whenever you see them there, a big friend of Stock Unlock, actually went out of his way to upload all of Stock Talk onto Spotify. So if you're on Spotify, check us out. I shared the link in the chat, so I'll do it once more so that you guys have it. We would really appreciate the support, checking out the show, sharing it with a friend. You could listen to this on the go. It doesn't have to be live, and it's just audio version on your phone with it locked, whatever have you. And then we are always talking to you guys in our Discord, which is always 100% free. Big Stock Unlock crowd there. So I will also share a link, and this is a great place to hang out, meet other like-minded investors, as well as get more entrenched in our communities where we're always talking about stocks, investing, and even some off-topic things and sharing some memes. So we like to keep it fun too. I'm going to drop that link as well. Anything to add here, Daniel?
Covered it all.
I'm not sure if I'm frozen or if you were frozen, but you might have been frozen there for a sec. I don't know if anyone in the chat wants to give us a heads up at who's frozen here, but we will be live again next week. Or rather the weekend. We always announce this in our Discord, which is a great place to check it out. I think.
Yeah. Am I still frozen?
You're with us. Yeah.
Okay.
You're like coming in and out. I can't tell if you're frozen or not. But anyways, this is a great way to know that we are live. Probably a good time to end the stream. And, we usually like to go a little bit longer. Been telling everyone, okay, we'll take this one from Brian. It is actually 14 days completely free. And we are also working on a freemium version, which will be restrictive, but we are trying to open up the top of funnel to people coming to Stock Unlock. We find that once people find us and use us, they really love us, but we are dealing with some headwinds right now where it does take a lot of effort and friction to actually go through the site, learn how to use everything. We could do a lot better with onboarding. So stockunlock.com, completely free, 14 days, no credit card. It's one of those things where if you like it, you can keep paying it to use it. And if not, please tell us why you don't like it. But, no hard feelings. We just want to hear from you. And yeah, 14 days to try everything. And it will be on a freemium model soon. So you'll be able to share links with your friends and stuff without them having to create an account.
Yeah, I can't wait for that. Am I back? Am I normal again?
I think so, dude. Maybe we're both frozen. Who knows? Anyways, thank you everyone so much for tuning in for this super short stream, which wasn't really that short, but it's short for us. And we're really looking forward to seeing you next weekend.
Yeah, can't wait.
Should I hit the thing?
Yeah, let's do it.
All right.
Goodbye, everyone.
Thank you so much, everyone.